growing, and we hope the business today can help them grow.
One, Q.
Nilesh Shah joining us. Nilesh, a very happy Diwali, and I'm positive that you can hear me now.
Yeah, now it's much better.
Wonderful. So, helping investors grow, Nilesh, and navigate through this extremely volatile time. How are things looking to you as we enter a fresh Samvat? What are you looking forward to? A better year for investors, guaranteed positive returns, or a whole new play when it comes to volatility?
Ready over.
Well, wishing all the viewers and the entire team at Business Today a very happy Diwali and a happy and a prosperous New Year and a great Samvat ahead. Well, we now have in our background a past Samvat which was more like kind of flattish because of the kind of challenges the world economy has been
You can hear the
facing.
guest, right?
India has
Just nod.
managed to navigate through these turbulent times really well. And I clearly believe that both the Indian economy and corporate earnings are expected to kind of grow quite significantly in the year ahead, and which is likely to manifest itself into the markets moving forward from here onwards over the next Samvat. So I do expect a more wonderful and a more eventful Samvat than the Samvat that we have seen over the last 1 year. Well, the global backdrop is certainly very, very challenging, and and in that context, India looks relatively fine. If you look at it, our growth rates are better than the world economy and rest of the developed markets. Our inflation is a lot lower, and this is something which honestly I have never seen in my entire investing career. And so, to that extent, this is a huge paradigm shift. It looks like is that the world is going to continue to grapple with these issues of inflation, and that's because of the kind of excesses that most governments world over have indulged in terms of releasing so much of liquidity and having interest rates so low. And it's pretty much the price that the world is paying for those excesses. Versus that, India did not indulge into those excesses, and so to that extent we have been relatively fine. But having said that, it surely is going to, in a way, certainly impact growth rates, especially some of the export-facing businesses will get impacted. The second is that when interest rates go up globally, India is pretty much compelled to raise interest rates, otherwise it takes a toll on the currency, and in the process we import inflation. So while the world is challenged and India is relatively fine, but it still is going to kind of impact us in terms of both our growth, our inflation and interest rate movements over the next maybe 2 to 4 quarters.
All right. So when we're talking about the domestic story then, and what's really going to drive that, would it be financials on top of your list? Really, should we begin there? And within financials, it's such a huge basket. What's the approach that you're going to be taking?
Well, the financials, are a very interesting kind of an opportunity. Financials are the cornerstone and the pillar of any growth economy. The good thing and the good news is that our banking system today is well capitalized. It has put behind the challenges of asset quality and has enough of capital and has built some really strong deposit base and CASA base to participate in the credit growth in the economy. And we are at a situation where the real growth is 6 to 7%, inflation is 6 to 7%, so we have an economy where nominal growth is 13 to 14%, and in that kind of an environment, the overall credit offtake is probably growing at 15 to 16%. So in that context, I think the financial space, the banking space is set for high double-digit growth over the next few years, and that I think makes the opportunity very, very exciting. While the large banks of course are a great place to be in, but clearly the next level of banks, the tier 2 banks, are probably an even more interesting place to be in, because they were the ones who were probably the most challenged and have been able to successfully manage those challenges and emerge stronger. So we think that financials are a great place, and within that expect the tier 2 banks to do even better than the large banks and the tier 1 banks.
And that was just going to be my next question. Look at the kind of returns we've seen on something like a federal bank. It's been phenomenal. So, what is a good entry point, Nilesh? How does an investor really pick when to perhaps look at picking up some of these names? Would it be at any coming dip in the market? Would you advise just entering perhaps consistently, over a period of time? How would you advise, one approaches investing into some of these buckets? And would you wait for, perhaps valuations to be more attractive, or would you just base it on price and a dip in the market?
Well, that's a great question, a very interesting kind of a decision which most investors have to take. And the way I'd probably do it is that tier 2 banks and banks in general need to be a core part of one's portfolio. And so whatever is the comfort level, the core position probably should be picked up even now, because valuations are attractive even now. I mean, while of course a lot of the stock prices have moved up by 50 to 60% over the last maybe 3 to 4 months, especially from the lows of May and June, but the valuations are still reasonable. Some of the tier 2 banks still trade probably at 1.5 times price to book. It looks like probably that in the next couple of years, or maybe in the next 2 to 3 years, or over the medium term, some of these banks are likely to kind of command valuations of maybe 2 to 2.5 times price to book. So to that extent, there is still a lot of room left for an upside. So to that extent, the core position should probably be there even now. And if the market does give an opportunity in the form of corrections over the course of the next few weeks or few months, I think it would be an opportunity to add up to the core positions and make it meaningful part of the portfolio. So yeah, I mean, I think even at the current prices, an investment is I think highly recommended. But if there were to be corrections, I think one should be ready to add more.
Awesome. Nilesh, does this rationale apply across the board to some of the tier 2 stocks, or would this be specifically for financials? What is your view when it comes to the other small caps in the market? Are there enough stories, or do you feel they'll be crushed, in the volatility?
Well, the mid and the small cap has always been an interesting kind of set of opportunity. Especially for a growth economy, it's always the mid to small size businesses which essentially are able to grow faster because they are nimble enough and they have a competitive strength in terms of a specific area, which helps them to grow faster. Technology adoption has made many of these firms' ability to kind of access a pan-India market in a much faster manner. So digitization is helping, in fact, the mid to small size businesses in a much more impactful manner. So I clearly believe that the mid to small size segment is hugely interesting. Obviously, of course, there are phases in the market where there's volatility and there's a shift from risk on to risk off, which does impact their stock prices. But I probably think that the mid to small size opportunity is not just there in financials, but it's across a whole bunch of businesses, be it consumer, manufacturing, exports, defense, technology services. I think there are a whole bunch of opportunities where the mid and the small cap space is extremely interesting. And if there is volatility, I think one has to basically use the volatility to kind of accumulate and add to the positions there, and then to have a more medium to long term perspective, and then clearly ride the whole journey of value discovery and wealth creation. So that's I think the kind of perspective one needs to have.
So Nilesh, what would you stay away from in this market? Whose time has peaked, or what's not looking attractive? You've mentioned so many good opportunities, but just to really be clear, what would you completely stay away from?
Well, so the next maybe the next couple of quarters, I think that some of the export facing businesses, especially businesses which are leveraged to the opportunity in developed economies like the United States and Europe. So there are some of the businesses like, say for example, textiles, or to some extent IT services in the very short term. These are some of the businesses which could probably have an additional layer of headwinds, and it's quite possible that they could face demand pressures, they could face a bit of margin pressures over the next maybe a couple of quarters or so. So that's probably one area where one will have to be a bit more careful than the kind of upside versus the kind of upside that we have seen over the last year or two. So that's probably one space which is the export facing industries. that's one area which probably one should stay away from. Apart from that, otherwise I think most of the other kind of sectors have huge tailwinds for growth and are expected to kind of sustain a higher earnings growth trajectory going forward as well.
Okay, what about healthcare? And I ask from a defensive point of view, do you see any merit in a defensive play in a market like this?
Yeah, healthcare is a very, very interesting opportunity, and of course there are 3 or 4 kind of ways to play healthcare. There's life insurance, there's general insurance, there's hospitals, there's basically domestic pharma companies, there are pathology labs and diagnostic chains. So it's a huge combination out there, and within that, of course, insurance continues to be a huge structural opportunity. Domestic pharma companies are likely to do well from a medium-term perspective. The hospital opportunity is quite significant, and we are seeing the emergence of several small to mid-sized hospital chains which are today local or regional but are aspiring to become national chains, and I think there's again a huge opportunity for them. Diagnostics is probably one space which looks a little challenged from a short to medium term perspective, while the opportunity is there, but it looks like that the competitive intensity is going up. There seems to be a price war where everybody is wanting to kind of keep giving a better deal to the consumer and in the process impacting their margins. So that's one area probably where one should be a bit more cautious or stay off from until valuations become more attractive, but otherwise on the whole healthcare remains a significantly structural opportunity.
Nilesh, what would be your advice to our viewers, to some of those newer entrants into the market, retail investors who've really possibly been having a wonderful time trying out their luck, but as they enter a new year, what would be your advice to them, and what would you tell them to expect in terms of returns, in terms of appreciation in the market or cycles, just so that they perhaps have an idea of what's to come? They may never have seen something like this before. I've been hearing that it's going to be a recession that perhaps even many of our veterans haven't seen before. I think we lost Nilesh. Nilesh, can you still hear me? All right, I think we lost Nilesh, and we'll try and get his advice for investing a little later. But it is going to be a choppy time, and while markets have already stabilized towards the end of this Samvat, there do seem to be a lot of warnings and a lot of signs that tell you to just be a little cautious as you plan your investments for the new year. Having said that, there's still plenty to cheer about, and lots of pockets of the market, of course, that we can continue to track and monitor that reflect the kind of growth that we're seeing here in the Indian economy. All right. Let's once again share with you some of the wishes coming in as BTTV sets off on a new phase of its journey. And thank you so much for watching. We will continue to bring you frequent news, views and offerings right here on BTTV Online.
Coming up in a new avatar. Now track every moment of the stock market with Business Today TV. That's right. A big congrats to the team of Business Today for putting out such a wonderful show. Stay tuned for more updates only on Business Today.
इंडिया टुडे ग्रुप का सबसे नया मेहमान अब आ चुका है, बिजनेस टुडे टीवी यानी बीटीटीवी।
और बीटीटीवी में आपको शेयर बाजार से जुड़ी हर खबर मिलेगी, और वो भी लाइव।
इसीलिए इसे देखिएगा जरूर। एक शानदार चैनल होने वाला है, और उस पूरी टीम को हमारी तरफ से ऑल द बेस्ट।
ऑल द बेस्ट, बहुत बहुत बधाई और शुभकामनाएं।
It's another feather in the India Today group cap, as Business Today TV is all set for its launch. Here's wishing the extremely talented BTTV team all the very best. And remember, for all the market related news, you can always track Business Today TV starting now.
Business Today is now coming in a new avatar. Now track every moment of the stock market with Business Today television. And it's a big congratulations to the team for putting out such a wonderful show. All the very best to them, and stay tuned for more updates only on Business Today.
देश और दुनिया की हर खबर से बाखबर रहने के लिए देखते रहिए आज तक, लेकिन जब बात बाजार की हो, शेयर मार्केट की हो, बिजनेस से जुड़ी हो, तो आप देखिए बिजनेस टुडे टीवी, इंडिया टुडे ग्रुप की नई शुरुआत।
It's been truly fascinating to see the brand and the products evolve from publishing to digital publishing, and now the big one, which is Business Today Television.
I'm delighted that the Business Today television studio, the production control room, the live market analytics are finally up and running. The team's been working mighty hard the last several months in bringing this together, and this is really the end of a very long and arduous journey to kind of get here, get this up and running. We think that there is a big and important space for a credible player in the stock market, news, information, video space, and that's the space that we hope that Business Today can grow in, can occupy, and really serve as a platform which serves the information, financial, analytic needs of this growing community of young retail investors who want to put their money in the market, don't really have very in-depth knowledge of technical charts, but are hungry to learn, are keen on growing, and we hope that Business Today can help them grow.